Hey, it's Mack with PriceActionTradingSystem.com, and this is Wednesday. It's January the 22nd. This will be our chart lesson for today. Um, I'm seeing a range day so far. You can clearly see prices. The first clue is that prices are swinging from on both sides of the EMA. We had a little bit of a channel working down here. We had the break, the new low, and now we've got a channel working back to the upper side, a little bit tighter channel. Um, I know a lot of people struggle with these days, but to me, these are the most predictable days, and this is where I had my um, line on this last move up. Somebody actually sent me an email and asked me what I use for a target. Well, that's what I used for the target right there on the way up, and I exited just in front of that. So I exited within 2 ticks of the high on that. This was a really good opportunity to get long or add on down here, and I'll talk about that when we get to it. This trade was similar to yesterday, where I entered here and had a chance to enter here, and then you had a chance to either, if you didn't enter here, you could either enter here or add on here, and so an opportunity to add on. That was a huge, quick move for an easy scalp, and then the runner just ran on up, and like I said, you look to exit up here off of. I was playing this more as a range really um, than this being the channel up through here, although that I do believe that's a valid channel move working up through there. We've got an overshoot now, so we'll see what happens. But let's talk about the trades real quick. Let me just make this a little bit bigger, back out just a hair and make it a little bit bigger. But I'm done a little early today, so I'm going to go ahead and do the chart lesson, and got some other things I want to take care of, so I want to get this out of the way today. But the first move I saw was, I mean, this is really looking like a trading range, and I originally had this here, but when you get this big line right here, this is a second entry short right here. It's a little aggressive to enter that right there, but you're so far away from the EMA. It's a second entry short. It's a fairly nice reversal bar. There's resistance right across here. So aggressive trader would think about entering there and at least riding it back to the EMA. Enough room to get a scalp there. But you can see if you entered there, you might have taken this a little bit further. So depending on how you played it. But so again, that's aggressive. It's usually best to wait on the second entry, which came here. But then you got a whole lot of overlap. I was hesitant to make this one red, but you had this trend line now, and we tested it against a lower high. It looks like a trading range day. But what I really liked was it went out the top side first of this little this little congestion area, all that overlap, and so it turned down and broke out the low side. So you could have gone short right there, but when it turned back up again and then turned down, what I would have done when it went lower here, I would have probably thought about dropping a limit order right in here and see if you can get filled, which you would have, and it goes on down. Then you get a failed second entry long here, and everything's gotten below the EMA. There's a failed second entry long, so just go short there. Easy scalp. It took it a minute to work on down, but easy scalp. And then it kind of bounces and comes back. You get a little correction is what this really is. There was a second entry short here, but it's not a very good setup. I didn't like it, uh, but it is a second entry short. What I would recommend here, this is where you'd probably, if you wait on the break and then maybe drop a limit order in and see if you can get filled. But we could have gone higher here and come back and tested this. So this is really aggressive, but I'm sure that there's some people that, recognize this little trend line down through here, and that's close enough, um, especially on a second entry. And it would have worked as long as you kept your stop above your signal bar, which would have been right here. But then you get a second entry short right here, again, right off that line, and you get 2 bars. This one's, it kind of came back and tested it again. So just go short right there. If you tried to use a limit order here, you got left behind. So, but now you've got a double top, and you're in a downtrend. You're coming off the trend line, so just go short right there, and boom. This one really took off, and this was a real easy trade. And just look to exit down here across these lows right here. So when you get down here, just look to exit any runners or anything you've still got live right there. And of course, it bounces right there. And you might have even considered going long here, but it's not a very good setup, and there was no other way to get in past that point. Um, there's a second entry short here. Now, by this time, you should have your line here. Notice where you're getting most of the touches, and you actually might have had it right there because you're getting, you're using the closes and still getting the most touches. You get this little failed break. It's a second entry short. It's kind of a repeat of what we had earlier. Um, Nice bearish reversal bar. It's really looking like a range day. So just go short right there. It's a second entry. And then you get the second entry off the high side right here. So you could, if you didn't enter here, or you could add on here if you wanted. Plus if you see this channel, you're looking for a retest with a new low, and off it goes and goes right down, makes a new low. And it was real tempting to enter long right there because that's where the last low was, the closes. But I think that's aggressive. If you entered there, you got stopped out unless you use a 2-tick stop. But it's just really aggressive with this being working down, because a lot of times that's what will happen. They'll make it look like it's going to reverse, and then they'll pull it back, and they'll trap people several times before it actually takes off. And so if you waited on this bar, this doesn't really look like rejection. It may have looked like the start of it, but when we failed to go lower again and turned up, I liked going long right there if you wanted to be aggressive. Again, there's a lot of overlap and all, very similar to up here. We haven't proven that the downtrend is over yet. But if you want to be aggressive, you could enter right here, or maybe just drop a limit order in here and wait for it to come back and sneak out early like that. But you're better off to wait on the second entry off the low, which came right here, and that looks like rejection. Just put you a stop there, or if you want to use a limit order, you can. Sometimes you'll get left behind on these, but you see it did come back, and it would have filled it all the way back down to right about here. But I like just using a stop there. Again, an easy scalp, comes back. Then you get a failed second entry long, so you can consider going long right there, which I like going long right there. Your stop goes below this bar right here. That's your swing low. That's your signal bar, really. So your stop has to go here. If you entered there, it comes back, and then it traps people again. I didn't like entering above this doji right here because now you've got them stacked up. So wait and see if you get another little trap, which you do right here, and it turns back up. So if you were already long, just add on right here, and if you weren't long, get long right here. It's all right off this trend line working up through here. Nice trade, and of course they got everybody trapped now to the downside, and look at that thing go. And that's a perfect example. That people were trapped because it takes off like that, and that's what causes it. They start hitting the stops, and then people realize that they need to be long, and they start jumping on, and we exit where most of the weak traders start entering. They see it moving up, and they start entering in here, and that's where we exit. And that's what I was talking about earlier. My exit, I had this right across there by that point. So I just looked to exit right in front of that, which is 1840, and nice easy trade. You get all of that except for maybe a tick or two, and that's what you want to try to do. You want to try to get as much as you can, but you can't always get it all. So I hear people say, yeah, but you left a point or two on the table. Well, most of the time trying to get that extra point or two, you just end up losing money. So don't be greedy. Take what it'll give you and wait on the next trade and get the rest of it on the next trade. But this is just a trading range day. If I back out here, it's pretty obvious. I would expect that we're going to pull back and test the other side of this channel here, the EMA or something, before we go higher. And we may go on up and test this high and maybe even this high. You just have to see. But there's strong resistance right here, so it could turn up and turn down and go back down from there. So just follow the price action, follow the rules. Trying to think, there was something else somebody maybe asked me today. think that's about it. I can't remember much. It's going to be a short one today. Again, these days are just really predictable. I love these kind of days because I'm usually done early on these kind of days because I get in and I get out. I don't hang around. I don't play around with it. I don't try to hold my runners too long. I just, you buy the lows, you sell the highs, and you exit when you at the logical places. Which if you're short, you exit down here if you can, and if you're long, you exit up here if you can. And that's how you play that. There's the only way you play it. And again, the clue is notice how prices are on both sides of the EMA. There was a little bit of a downward tint to this because the EMA is going lower, but look how flat it is and look how prices are swinging to both sides. That's your clue that it's a trading range day. And you got to pretty much trade it like a trading range day. Sometimes these ranges are real tight and sometimes they're larger than other days. But that's what I saw today, and it was a good trading day. A couple of these moves, this one, and this one were easy runners that gave you some nice profit, and the exit areas were fairly logical as well, so you know where you should be exiting. But anyway, I'm going to wrap it up. That's going to do it for today. Actually, there's one other little housekeeping thing I want to do. Somebody posted on YouTube that they'd sent me some emails, and I didn't respond. So I always try to answer all emails within 24 hours. Doesn't matter if if you're somebody I know or don't know. I always answer all emails within 24 hours, except maybe on the weekend. Sometimes it may go closer to 48 hours because I got to get away from this stuff sometimes. But I always answer every email I get. I don't ignore. The only emails that I might ignore are if you're some kind of vendor trying to sell me something or trying to offer me some kind of service with my website. If you didn't get something back on that, it's just because I wasn't interested. So, but otherwise, I answer every email if it's got anything to do with trading. So if you're not getting a reply from me on an email, either I'm not getting it or it's not getting back to you. So you might want to check your spam box or make sure you're sending it to the right email address. Just send it to info@priceactiontrading.com and it should get to me. I tested it this morning myself and emails went right through. I tested there's also on the website, if you go down to the left-hand corner of any page, you'll see a contact link. I tested that. All that's working properly. So you can contact me either of those ways and I will get the email. And if you're not getting something in return, within 24 hours, I would look in your spam box just to make sure that, whatever I replied to you didn't go into your spam box or spam folder or something. So, but yeah, I am answering emails and always do. So shouldn't be any issues there. If you're not getting a reply back from me for other than the reason I stated that you're a vendor or you're trying to sell me something or link exchanges, I'm generally not interested in that kind of stuff. So if you don't get a reply back from me there, you'll know I just wasn't interested. So, but anyway, this is Mack with PriceActionTradingSystem.com, and we'll see you next time.